Hello and a warm welcome to this video. Now, in today's video, I've covered Hindustan Unilever, MNC flagship company, Unilever parent group, MNC giant. Not just a small giant, but in 90% of its product, Hindustan Unilever is a market leader. It has a market cap of 5,31,759 crores, the return of equity of 20.5%. Its dividend payout is almost 100% record in the last 5 years. Trailing 12-month PEG ratio at 10.2, almost debt free, with an improving net cash flow. Currently, but trading at 10.5 times its book value and is having showing a tendency of non-core income in the last 2 years. Has a very high Petroski score. Promoters hold 61.9%, domestic institutions hold 12.31%, FII 13.65, and the public a very small 12.11%. Now let's dive into the charts. Now, before I get into the depths of the Hindustan Unilever chart, it's important to understand that the FMCG sector has seen a major underperformance in the last quite some time now. Prior to this, also there were exceptions of only among the heavyweights of ITC and McDowell United Spirits doing well. The others were kind of laggards. Sometimes Britannia and Colgate were also performing, but even of late we have seen the decline coming in the other FMCG stocks also. So before I delve into Hindustan Unilever, would like to share with you all what is happening in the the sector with the Nifty, that is the FMCG sector, which you can see out here, CNX FMCG with Nifty, and this is the weekly scenario that from June 2023, just around the time when the markets had started bottoming out and rallying from April 2023, and Nifty from around 16,800 had started rising, and now today Nifty is almost near 23,000. Look at what the ratio, the spread chart of FMCG with Nifty. It's come down to its November 22 lows. That's where FMCG had started outperforming the index, when the Nifty was correcting and the index were FMCG stocks were going up right down to that ratio of 2.40. And if this does not hold, then the continuation of an underperformance goes to 2.3, maybe 2.2 also. Now, what would be the earliest confirmation of a reversal of this ratio? It's not, unless it doesn't start pushing its way above the ratio of 6th of March, 2.4 to 2.45. Till then, the underperformance might linger. So even though it is at a fantastic support in the ratio chart, this could mean some sideways, doing in line with Nifty also. So at least minimum 2.45 should be taken out before we look at some other thing. Especially you can see out here the previous swing zones at 2.45 need to be taken out. Now let's try to compare Hindustan Unilever with the FMCG sector index. Now you can see out here that from 2020, the index has outperformed its second largest weight holder, largest being ITC, then Hindustan Unilever, and Hindustan Unilever rank underperformer to its index. So if you had put your money in the FMCG mutual fund or an FMCG ETF, you would have probably made more money than you would have, or maybe your loss would have been less if because of the index underperformance compared to Hindustan Unilever, which is now, look at where it's reached. It's reached the level from where Hindustan Unilever, like tried to, dominate the picture. See, three times it's come out here at 24 and a half, 2004, a little bit near in 2009, 2015. So this is the level from where we saw the Hindustan Unilever dominance 2017 to 2020. So that's 3 years of dominance and now 4 years of underperformance from Hindustan Unilever. If it continues to breach above this level of 24.5, then Hindustan Unilever could continue to underperform all the way till 28 also. Now, where does the earliest sign of reversal happen for Hindustan Unilever to do better than the index itself is when this ratio comes below 23 and a half and starts closing below it on a daily basis. So within the sector also a rank underperformer. Now let's see what's it doing with the Nifty, because it's a Nifty 50 stock. It's a large cap company. So here also you can see that the underperformance from 2020 all the way to 22, then a little bit of recovery, then again a major underperformer from October 2022, approaching again another wall. This is where it started dominating October 2016, the index, the Nifty. So 4 years of dominance, now in the fourth year of underperformance. If 11.5 is taken out, it will continue to be a underperformer in that case also. Now, for it to do better, this is a monthly chart. I'm coming to the daily ratio spread below 9.8. That's when Hindustan Unilever will start doing well. Now, this does not mean that Hindustan Unilever cannot do well and the other stock, compared to there, it can also rise. But its performance with its own parent sector and with the Nifty will be less. So probably your yields will be much lower in long. Still, those ratios are holding. Now let's have an understanding of Hindustan Unilever itself as a chart, a large dividend player, a phenomenal run. You can see the charts. Even if I go to the quarterly charts, the performance, it's been a mind-boggling performance overall from an investor's point of view. And here you can see from July 21 in the quarterly chart, it's been a rank underperformer. It means your money has not given you any return at all. It's practically negative after you take out your interest cost. Yes, there has been a dividend payout regularly, but still a rank underperformer. And the monthly now at a crucial support of 2250. If this does not hold, then it comes down to 2150, then 1975 is the next. These are the three monthly support areas. There's a resistance at 2300. Above that starts sustaining, then 2450. So a narrow range right now, 2250 support, 2300 resistance in the monthly. Also notice out here from September 21 to December 22 to back to July 23, we have a triple top scenario out here, one after the other top formations taking place out there. Now let's have a look at the weekly chart and try to garner what we can. So you can see here September, almost double top or triple tops out here taking place, getting rejected violently from out those places. A little bit of sideways took place from December 22 till or December 23. That's a 1 year sideways scenario, and then the breakdown has taken place. Now, weekly support is not there before 2100. That's the earliest support below the Ichimoku crowd out here. Future Kumo still bearish, but the baseline to the price has gone very far. Statistically, whenever it goes so far, it tends to stop the fall or tries to go sideways to or tries to go back towards the Ichimoku baseline as much as possible. So previous scenarios of the same happening were in March 22 also, where we saw that similar bounce. One here again in March 23, similar bounce going back. Now here in that zone of setup. So can it do that bounce for the month? Weekly, the resistance is very far right now at 3375, at 2375 out here, the Ichimoku cloud resistance, and above that you can see so much time place has taken place at 2450 level. So this is not going to be easy. Plus it's the weekly Ichimoku baseline which is going to remain flat for a very lengthy period of time still. Lots of weeks of flatness. If the low is not violated, this is going to remain flat. So if it remains flat and the low is not violated, it would be a good sign of at least a pullback possibility in the case of the weekly chart. Now let's have a look at the daily chart and try to understand what's the scene out here. Again, the daily baseline to price again at levels from where it sees a bounce or a sideways, and that's what has happened from 2225 all the way to 2300 out here. And prior to this, also there have been events This has happened April 23, again a little bit here, and again in February. So it tends to do that, but it has not been able to break above the Ichimoku baseline. So smart money, which would be ruling their shorts or not entering it, the institutions not buying it, will not be showing any interest right now. So for them, the immediate support is at 2225, this one out here, and the resistance at 2300. So 2300, a monthly resistance as well as a daily resistance above 232350, which is monthly, weekly, daily, all three walls at 2350. And you can see, if it manages to take out 2350, then it's a huge pull up towards 2400 to 24 50 odd levels out here, like that. So very important levels of 2250, 2225 on the downside, and 23 on the upside in the daily so far. Let's have a look at the hourly time frame for a short term point of view. So, an attempt to go off the cloud, failure again down. So, immediate support 2250. Failure to hold this on an hourly basis would mean a formality of testing 22, 25 odd, like that, and then that further possible breakdown happening below 22,500 to levels of 2100 and 1975. So crucial, very crucial for from long's point of view, whether it is a consolidation happening out here since April 1st till now, and that. So what would be the levels from where longs would be interested and start seeing the stock go up? The earliest is 2375, short covering above that, and strong momentum could likely come above this 2300 level. Again, see 2300 matching with all time frames currently for the stock, which again pushes it all the way to small formality at again then at 2350, and then towards this level of 2475. Until those levels are taken out, looking for major upside in Hindustan Unilever is not clear to me, at least at this current juncture. So, a disclaimer that this is not a trading advice or an investing advice. This is an educational video made on relative strength, relative rotation graphs, spread charts, Ichimoku on the daily, on the stock at the current moment we are analyzing. And please do your research thoroughly before taking any decision. Manage your risk and always respect your stop loss. And above all, if you've liked this video and if it's been of any help to you and guidance to you, so please do like this video, share it, and do follow me for regular such updates. Until then, happy investing.